Bankole, it's great to have you on the show today. And I'm hearing that the Naira is stronger today at 157.40. Can you just talk us through the market dynamics today?
Yes, what we're experiencing is the continuous inflow of foreign exchange into the economy in pursuit of fixed income securities. That's bonds, especially of the 2019 maturity. That's the 7-year bond maturity that has dropped in yield significantly today. Basically, what happened today was that market opened at 157.75 and closed at 157.45. But it actually touched 30 level, 157.30, before it pulled back to 157.45. It just showed how much FX dealers are willing to close down or sell down some of their position and not hold the USD against the Naira, because it shows, going into the next few weeks, couple of weeks, we would experience further strengthening, even if it may be marginal and not very huge, but it will be taking a bet against the wrong direction if you hold the dollar against the Naira the next few weeks.
Next week we have the MPC Monday, Tuesday, and of course after the meeting on Tuesday we'll be getting that communique, hearing the interest rate decision, and of course any decision they will be making with respect to the currency. Before an MPC meeting like this, what's on the minds of FX traders, and how do they? Is there any more? Are they more conservative ahead of an MPC, for instance?
Okay, at the MPC meeting that is held every other month, MPR rates, monetary policy rates, are determined alongside the net open position limits. That is where they usually focus on, and there was a drastic reduction in the NOP limit that was done 2 months ago. We do not expect any major change. The FX dealers are not really agitated this time around, except if something comes up, maybe a marginal increase because of complaints here and there. But I do not see a significant increase back to 5% level as it was. Focus is on the monetary policy rate that we said earlier. It's currently at 12%. A couple of analysts think it's too high at that level, and that they expect or anticipate a marginal reduction. Generally, popular opinion holds that it will be maintained because of the CBN's determination to target inflation. Inflation is still high at double figures. It's far from what they hoped for, single digit. So they would keep it tight and ensure that they just flex other rates like CRR and then play around with net open position to
so
see
the
how
MPC
to make it flexible in that sense. Yeah.
So the MPC may keep things tight, but I'm hearing that the money market is tight right now. I'm hearing overnight rates at about 16%. What is causing the tightness in the money market right now?
The money market is tight because federal allocations came in very early last month, and of course these monies have dried up as this is a very buoyant economy, and we do not expect federal allocations soon. We're looking at in the next 1 or 2 weeks, but we expect cash call to come in. Cash call in itself should not be more than between 40 to 50 billion, and this may not be able to drag down rates as they are right now. Federal allocations will come in and towards the end of the month, and what it means is that because of the public holidays, federal allocations came in very early, creates a 6 weeks gap. I don't want to call it illiquidity, of lack of inflow basically. So that's what's caused it actually. So
when are we likely to see
probably each up to about 17?
When are we likely to see those monthly allocations come back?
Yes, 3rd, 4th week of the month, but I don't see it coming in early.
So it's not likely
week.
to happen next week?
I'll be looking at upper week.
Okay.
No,
all right.
upper week.
Let's move back to the bond market. This week, clearly, we've seen the market continue to rally, maybe inch higher when you compare it to how it has performed over the previous 2 to 3 weeks. Your thoughts on where yields are today, and do you think that we can continue to see them move higher? We're looking at yields as low as 13%. In fact, I think some bonds are now as low as 12% and change.
Yes, I'm sure the figures you just quoted are of the closing period for yesterday. As of today, we have the 2019 bond maturity. It has touched 11.9%.
Wow.
And this particular maturity was issued last month at the bond auction. It stopped at 16.1.
Right.
Yeah, the 2017 bonds maturity stopped at 16.3. But they have dropped 400 basis points since then in just less than 30 days. It just showed how much demand we have and how much dollar is chasing the naira right now, and that explains what's happening to the naira. What's causing the marginal strength it's achieving. Going into next week, we're going to see further drops marginal because there's a bond auction. 30 billion of 2017 and 2019 bond maturities will be issued, and already we are seeing secondary market activities demand go up seriously. We've seen people buy 2019 in particular. People are locking in, FDIs in particular. T-bills are still at about 13%. We've not seen that very crazy demand yet, basically because there was no calendar of how issuance will be made and how much will be issued and all that. But as of today, I can confirm to you that the calendar has been released for T-bill issuance for the next 2 or 3 months, basically. So with that, I know that the local market itself enough can actually track down the yields of T-bills at the secondary market, basically.
Let's think a bit, Bankole, about MPC next week. We know that one of the main reasons why they decided to tighten last time was the naira. We've seen the naira strengthen. We've seen oil prices holding very steadily above $110 per barrel over the last few weeks, in fact, over the last month or so. And clearly, the sentiment for the naira is very positive. You just talked about bonds, investor interest in bonds being significant and very steady. Do you think that they could actually cut rates next week?
It is possible there could be a marginal reduction in rate. Just to show intent. Just to emphasize the flexibility of what CBN is doing. Its policy that if the naira responds well, we'll flex it a bit, and then if things need to be tightened, we will tighten them. It doesn't have to be fixed for too long. The CBN has indeed been flexible. We've seen movements of rates up and down in reaction to what inflation actually does. Inflation is not out yet. We expect it by Monday, Tuesday. If it comes out on Monday, of course, it will have impact on the decision they will be taking, basically. It is possible for rates to be slashed marginally.
Unfortunately, we have to leave it there, but Bankole, thank you so much for joining us today and giving us your perspective on the market. We clearly will be watching that MPC decision, and of course, our viewers can watch that, follow that on CNBC Africa next week.